Good day, everyone. This is James Bennett, a global equity analyst at Anchor Capital. Just a short discussion on O'Reilly's Q4 24 results. O'Reilly's one of the top two auto spares stores in the US. It's been a phenomenal business over time. Looking at their Q4 results, I mean, one of the key drivers for O'Reilly is same-store sales growth. You can see going back many years, it's never gone negative. 2024 was a little bit of a quieter year, although we saw momentum accelerating quite nicely towards the end of the year. So in Q4, same-store sales grew 4.4% year on year, which was well above consensus of 2.7. What management always says is that whenever you have a quieter year with auto spares like this, it's almost inevitably followed by a better year the following year, because remember, you can only delay your auto maintenance for so long. So that's a great track record over time. Excellent margins, I mean, growing just very steadily over the years, having settled at a very comfortable 20% over the last few years. One of the real keys behind O'Reilly's excellent share price performance over time has been the consistent buying back of their shares rather than paying a dividend over the years. One of the downsides with their share price having run pretty hard last year is that they only bought back about 3.8% of their shares in issue, which is a bit below the long-term average of 6.3%. But it was still a decent enough number. And if you look at that right-hand chart, I mean, here's a company that has reduced its shares in issue by about 60% over the last 15 years. And that's been a big reason for its strong share price outperformance over time. One of the real strengths behind O'Reilly is its large footprint, mostly in the US, big distribution centers that make it very difficult for the smaller stores to actually compete with this chain. But even for O'Reilly, there are areas like in the Northeast where there's some potential for them to actually gain market share. The other thing with O'Reilly is that if we look at the big two in the US, which is AutoZone and O'Reilly, they've both only got about 15 to 16% market share. And some of these smaller players have really been struggling over the last few years and have been donating market share to the bigger two guys pretty consistently. So yes, O'Reilly's a big company, but there's a very long runway for these guys to continue gaining market share over time. I mean, this has been an astounding share price over the years. It's gone up over 100-fold since about 2000. I mean, this is one of those shares where you really wanted to just buy and tuck it away. You know, timing your entry point wasn't really that critical. The main thing was just to be in the share and to hold it for a long period of time. Having said all of that, you know, O'Reilly is sitting at the very top end of its valuation range over the years on about a 29 times 1 year forward PE. But again, we would just say that over the years, using this PE multiple as a trigger point to time your entry has never really been that reliable. For the most part, you really just wanted to be in the share. Yes, it's run hard recently. Maybe it needs to consolidate a little bit, but this is a great quality compounder just to tuck away in your portfolio and forget about over the years. Thank you very much.